Hello and welcome to Options Guide TV. My name is Brian Overby. I'm the author of the Options Playbook, and welcome to Fundamental Friday. So today we're going to continue with our position in Apple. Apple has been a good stock for us to learn about how to use options to enhance your stock portfolio. We put a position on in Apple heading into the earnings report. We protected that position by buying a put option, and then we sold a call against the position to help pay for the put option, which effectively created a collar. We then came back after the earnings report and we bought a deep in the money call as a stock substitute. So we still owned our 100 shares, but we added to the position and we bought something that acted like 100 shares of stock. And now today we're going to come back and we're going to add another leg to our position. We're going to look at doing a cash secured put to see if we want to buy another 100 shares of stock, another 100 shares of Apple. But before we get too far along, I have to let you know that options involve risk. Before you trade options, you should receive a copy of the characteristics and risks of standardized options. Past performance is not a guarantee of future results. The ODD, or the characteristics and risks of standardized options, can be found throughout the Tradier website. Give them a call if you need some help. All right, so now let's run over to the options playbook and we're going to talk about the cash secured put. So let me get there. So here's my website, optionsplaybook.com. And what I'm showing you here is the cash secured put. And this is the profit and loss graph for a cash secured put. Now, you might have caught that I keep saying cash secured put. Now, I don't really look at uncovered puts, otherwise referred to as naked puts, where you don't have the cash to buy the stock. We're looking at a situation that we like Apple. We already have Apple in our account. We're doing all right. We say, if the stock pulls back a little bit, we wouldn't mind buying another 100 shares of stock. And if I'm going to do that, obviously I have to have the capital in the account to be able to buy the stock at the price that I'm determining. Now, you can do that in a normal brokerage account, and people do that all the time. They just call it a limit order. They say the stock is trading up here. We're going to make a limit price to buy it if it comes down here. Today, we're going to use the put option to do that. So if you sell a put and that put gets assigned, you have to make good on your obligation. That means that you have to buy the stock at the strike price of the put. But the beautiful thing about it is that you actually get paid for saying that you will be willing to buy the stock at a lower price. So cash secured put is secured because you have to have the capital in your account in order to buy that stock at that strike price. Now, one of the things that is wonderful about a cash secured put is this is a strategy that Tradier will allow you to do in your retirement accounts, like an IRA account. If you are approved, and you have to get the approval to do this, you have to fill out the option trading application and get approved. But a very simple thing is to just do a cash secured put, because it's not much different than putting a limit order in, saying that you would buy it at a lower price. And if you do that, if you did a limit order, you would have to have the capital in the account to be able to buy it at that limit price. And if not, the trade would actually get rejected. So in this instance, we're not doing much different, except we're using options to try to buy the stock at a lower price. So in the profit and loss graph, which we've shown a few of these now here on Fundamental Fridays, is we have the stock price at expiration. This is the stock price right here. This is the put option. If we just sold a put option, and let's say we weren't trying to buy the stock at a lower price, the most that we could make is the premium that you could pay. So if people are trading these and they're doing them uncovered, they're not planning on buying the stock, it's a very speculative trade, especially if you don't have the capital in the account to be able to buy the 100 shares at the strike price. But then your maximum upside is going to be the net premium received from selling the put option. You still have unlimited risk all the way down to zero. You could actually say substantial because it can't go beyond zero. But you notice here in my profit and loss graph, I actually drew a dotted line saying that the dotted line represents the potential profit and loss if the stock is assigned to you. So if the stock is trading somewhere up here, some up in here in this range, the strike price is going to be below that. And if it comes down and it actually gets put to you, your break even is going to go down to the strike price minus the premium received. You buy the stock because it's handed to you because that's the obligation you took on. And then this just looks like a normal and profit and loss graph from owning the stock. So that's the difference. If we ran to just the short put section of the options playbook, optionsplaybook.com, you would not see the dotted line because there's a totally different concept between, in my mind, of a cash secured put and selling a put, just hoping that it expires worthless and you capture the entire premium. So I'll scroll down here a little bit and I'll just show you the setup inside the website. It says we're going to sell a put at strike A. We're going to keep enough cash on hand to buy the stock if the put is assigned, or we should say, well, someone would exercise and then I would be assigned. Generally, the stock would be above strike A. The stock would be up here somewhere. So we're targeting a price below where the stock is currently trading. And that's what the cash secure put is. Now, let's go back and look at the options chain and let's review our position on Apple. So let's come back out and we're going to run over to tradier.com and we're going to look at our paper trading account. And at this point in time, it's worth mentioning that if you want to follow along on Fundamental Fridays and you want to place the trades right with me, it's free to do that. If you open up a Tradier account, and you can do it using the link below the video here. There is a link that will take you there and will also offer you 4 different videos that I've done personally to try to set up Fundamental Fridays, talking about the vernacular, the marketplace, how orders are entered, et cetera, a little bit on option pricing. But if you'd like to do that, please click on that link below and set up an account. And with that said, we're going to take a couple of seconds here and we're going to hear a word from Tradier about Tradier.com.
If you've been watching this show thinking, this all sounds interesting, but how do I actually start? That's where Tradier comes in. Tradier is a brokerage platform built for traders who want professional level tools without the complicated barrier to entry. As a beginner, what matters most is simplicity, reliability, and cost efficiency. Tradier gives you a clean trading interface, transparent pricing, access to stocks, ETFs, and options, and the flexibility to grow as your knowledge grows. What I like about Tradier for beginners is this. You can start small, you can learn, you can practice responsible position sizing, and you're not locked into something that won't scale with you. There's a link in the description below where you can explore Tradier and open an account when you're ready. Trade smarter, not harder. Use the right tools from day one.
All right. Thank you for that, Lex. And so with that mentioned, let's look at a chain in Apple. Inside the Tradier.com platform, we're in the paper trading app right now, and we're going to execute a cash secured put. So in Apple, we have 100 shares of stock already. We have a long call option, and we still have a short call option, a covered call position in our account. Nothing to worry about because we have the stock. If the stock got called away, we would just be selling the stock at a higher price than where we bought it at. But if I'm looking at setting up a cash secured put, here's a couple of the rules that I like to use. I'm trying to make sure that if I get put the stock, that it's a price that I'm willing to buy it at. That's number one. And in this instance, we have the Tradier.com chains. I put in the symbol Apple, AAPL. The calls are on this side of the screen, and the puts are on this side of the screen. So we're going to focus on the puts. The stock right now, we'll call it $293.50. We have the bid and the ask for the stock, but we'll call it $293.50. We're going to look at the 290 strike put in this instance. We have the bid, this is the sell price, and we have the ask, this is the buy price. Right now, that market is $6.45 by $6.50. All right. So one of the things that I like to do, grab a little calculator, and I'm going to take $6.30 and I'm going to divide it by the current stock price. I'm going to say it's $293.50. And when I do that, we see that we're bringing in about 2% of the stock price. Now, to me, a big concern about a cash secured put is that I don't get put the stock. I've already said I want to buy more shares of it, but if the stock runs away from me, my put option will not be assigned and I won't buy the stock. And that's one of the bigger risks of a trade, is that you don't get to buy the stock and the stock runs away, and then you just decide, well, shoot, I missed it. I'm not going to go back out and try to chase it. These are words that are used by traders all the time. So if I'm doing this, I'd like to get at least 3% of the stock price. Right now, we're looking at 2.14. We're very close. I'm going to execute the trade, but the stock has ran up a little bit. Right now, it's actually it's moving. It's 293.66. I don't mind this premium. We can go out 35 days. One way that we can add is we could go up 45 days. We could look at the inside the change. We could go out to the 41-day expiration. We could go out to the 49-day expiration. But I want to make sure that I bring in enough premium that I am okay, and that's from the sale, enough of a credit to the account that I'm not really disappointed that I didn't get to buy Apple, right? Because I'm getting paid for saying that I will buy it. All right, so let's execute this trade. And so we have the bid, we have the ask, we have the 290 strike. We're going to hit the bid right here. And we're going to send that to the ticket. So this is the way the trader.com site works. And we pop it up and we look down below. And here's what we have. We are looking to sell to open the June 12th, 35 days away, highlighting that right up here. Expiration 290 strike put, saying that we are willing to buy 100 shares of Apple at $290. That means that we have to have $29,000 in the account if we want to buy 100 shares of it. So if I'm doing this in an IRA account, I can do it if I have the approval, but I have to have that capital in my account in order to place the trade. And able to do that, if I have the approval, I can do this on a cash secured basis. Now, I've mentioned this many times on the show, and this is one of the benefits of doing this in a live paper trading environment, is that we actually always put a limit order in. If we're even going to hit the bid price, we're going to send it in at the bid price. I still want to put a limit on it. I don't want the marketplace to decide what is a good fill. In the stock market, a lot of people will do that because the markets are so tight in just Apple stock. But in the option contracts, we got a little bit of fudge between the bid and the ask here. The bid price is $630, the ask is $660. I don't want to get any worse than where the current bid is at. So I'm going to actually click on it. Look at that. We made a dime by waiting. So it's going to be $6.40. And we're sending it for a day. You could say good till cancel, but we're looking to execute this right now. And here's our trade. In Apple, we're looking at the June 12th expiration, 35 days out. We're going to look to sell to open the 290 strike put, saying that we're willing to buy it. We have enough capital in the account to be able to buy 100 shares at 29. So $29,000 in order to place this trade. And we're going to bring in about $6.40. We should get filled fairly quick on this. And I'm going to hit preview order. And it gives me a summary over here. It gives me the quote, the bid ask, tells me exactly what I would bring in if I have any fees in order to execute the trade. It'll also tell me that. And boom goes the dynamite. Trade has been submitted successfully. So once again, if you open up a paper trading account, you can trade right along with me. And we're going to run back over to the dashboard, which is my favorite view inside the Trader platform. And we see that we have the Apple trade in. to sell this at a limit of 140. And then we look down below and we have our position. We have Apple, and you can actually use this little feature right here. And I know it's kind of small on your screen, but it says create a new group. And if you check these boxes, you can create a group for all your Apple positions. And so far, here's what we have. We have 100 shares of Apple. We sold a call against it. And this call is an issue. And we're going to talk about it on the next Fundamental Friday. But I'm going to let it go here at this point in time. It's the May 15th expiration, but we got the 290 strike call, and we're a little bit in the money. So we're going to talk about rolling that position if this continues to be the case. It's fine if they call the stock away. We still have a real good gain in Apple. We're up about over here. It's showing us almost 9%. I was going to say 10, but we'll say 9. We'll round down to 9% on Apple since we started the position. And these positions are just to learn. So we're doing pretty good considering that we're just trying to learn here on Fundamental Friday. And then we also went out after the earnings and we bought a 250 strike call with the October 16th expiration. And on that position, we're actually up almost 18%. Now, the short call means that we got to give up this stock at 290. It's okay. If the stock pulls back below 290, we would be all right. Now, if I wanted to avoid assignment, we'd do something that's called rolling a covered call. And I will give you that little hint on how to do it. We're going to make sure that this trade gets filled at that $6.40 mark. And then once we do that, that position will get added to our Apple position. But let's pop back out here just a little bit. And I'm going to highlight a section of optionsplaybook.com that if you want to explore this, if you have the paper trading position on and you want to look at rolling a cover call, I'll tell you the risks of being wrong are never lower than they are right now. So if we pop back into the optionsplaybook.com, you see rolling a covered call. So this entire section talks about if you have a call option on a stock that you own and you've sold it, saying that we have a covered call position, and that stock ends up going above the strike price, making it an in-the-money option contract. A way that you can try to avoid assignment is to roll the call option. You buy to close the current option contract, and you go out in time and usually up in strike, and you sell another option contract. And by going out in time, you bring in more premium, more price, and you try to get it done for a net credit to the account. I'm going to leave it there. You can read about it. That will be your homework. And then let's pop back out just for a second. And we're going to call it a day. My name is Brian Overby. I am the options guy over at hub.trader.com. If you want to join along on Fundamental Fridays, I'm happy to answer any questions. Just put them in the chat box. We'll answer anything that we can. Go to hub.trader.com so you don't miss any of the Fundamental Friday events. And it's a free to sign up. Trader sponsors it. A lot of great speakers that you can find out about. And here's my book, Options Playbook. If you want to learn more about what I do, check me out on x.com. It's at Brian Overby. And the website that you want to sign up for the account is tradier.com. Thanks for stopping in.
You know how the financial world goes. Here comes the buzzkill. Please make sure to take some time to read this boring disclaimer. We will owe you one.